that the bias on a market is absolutely not a narrative. Okay? And I've had over the years students come to me and say, hey, look, it's not important. What should I focus on initially? Like, what's the first thing as a developing student, trader, or someone that's a break-even type trader? What should they focus on first? And they think it's entries. Tell me how to get into a marketplace. How do I know when to buy it? How do I know when to sell it? What's the entry mechanism that never fails? What's the buy signal and sell signal that allows me to not worry about placing a stop loss because you're too angry to get in and start trying to first realize the risks. And before you even get to that stage of knowing when to buy and when to sell, or even stop losses, because they're pretty easy. The very thing that you're afraid of the most, placing stop loss and controlling the risk, that's the easiest thing. That's the easiest thing to do. And you can tell, and I was guilty of this in the beginning too. As a 20-year-old, I was afraid to place a stop loss because I was afraid I'd be wrong. I was afraid they would stop me out. And at the time, I didn't think of a collective day, doing the air quotations with them. I just figured that the market would just come back and get my stuff and then run without it. And I didn't even have enough experience at the time. We weren't that familiar. But it just goes to show that that's what we're afraid of. We're afraid of this. As an investor, as an entrepreneur, as a trader, you got to warm up with the idea that you're going to do it wrong. The market will sometimes just be stupid and do something that you did not expect. Okay? And that might incur a loss. So the bias on a marketplace, that's very simply, are you bullish or bearish? Now you can be bullish or bearish on the daily chart or weekly chart and have a very long-term or intermediate term bias. But I'm bullish on gold. I'm bullish on equities. I'm bullish on whatever currency you're interested in. But for what time frame are you bullish? Because I could be bullish for 10 minutes trading in a 15-second chart, but inside of a long-term macro bearish market, and I can trade properly doing that. So many of you are so rushed to try to get into something. You're not giving yourself the adequate time to learn how to trust a bias, and then moving past that to where the rubber meets the road, it's narrative. See, bias is rather simplistic. You arrive at that on the chart. You arrive at that on a daily chart. Is it ever going to go higher to an old pool of liquidity, an old relative equal high, two highs that are close proximity to one another? And the most recent one beats slightly lower. That's like key. Okay, it's where all the retail traders are still safe and being short, placing their stop loss just above that. So I teach you just how to reach for that. And that is simply cut and dry, as easy as you can get for a bias. Whatever time frame that exists on the relative equal highs, that's the time frame that you're bullish. Does not mean you won't have down candles. It doesn't mean you won't have down days in between where it is right now and when it gets there. But all too many times, traders see a down day when it's unlikely bullish. My boss was through everything out the window because it probably just reversed because we got down, it blows down 100. That doesn't mean anything to this on. I should have any, bearing on what you believe is bullish on that time frame. In fact, it's good that there's down days in higher time frame charts like that, because that's how order blocks are created. Market trades above that down close candle, and it comes back and touches its opening price. And you have a change in the state of delivery for the short term, but it's already been bullish. You see how quickly a knee up on someone new can get lost in the time frames and feel like I'm doing the sands of time are just carrying me here and there, and I don't know what I'm doing. Why is ICT calling it bullish? Why is he looking for it to go here? Why is he looking for it to go there? Why didn't he do this and why didn't he do that? That's what we're talking about today. See, it's not enough to know that it's likely to go up. It's not likely to go straight up every single day when you're bullish. That is unreasonable. Unreasonable. Every case, far less like doesn't go up. Out of all the books I've bought, all the authors I listen to, even people that claim to have made lots of money, even my initially, first mentor, Larry Williams, his tools rather simplistic, but didn't really get to the core of what I was aching for. Was how do I navigate this stuff? Even if I see all the things that I had grown to trust as a brand new student of his, 1995, I had to find my way through all that stuff because I would overanalyze, I would second guess, I would sprinkle this and that from everybody else that I thought I was learning good stuff from. And it wasn't helping. It wasn't helping at all. Because I didn't know the mechanics of what was going on behind this. With liquidity, time-based work. And that's the crux of what makes algorithmic price delivery what it is. It has absolutely zero to do with how many people are buying and how many people are selling. And it's silly when you think about it because you say, oh, look at the buyers. The buying pressure. Here's how you quickly throw that into the bin. Okay? You cannot get filled on a long purchase of any instrument at all unless someone's at the other side of it. So there's transactions there. They're on both sides. It's funny how everybody misses the idea that it's going up. No matter how many contracts, how many shares, how many lots are trading, whatever entity state the other side doesn't matter. It's still the same buying and selling pressure at the same time. But you'll believe the books. You'll believe the authors that regurgitate everything else the books have taught. And it's funny how you're always learning and never coming to the knowledge of the truth. You're never getting there because you're believing the lies and you're drinking from the well that's tainted. If you go in looking for things that are false, not realizing what you're looking for is false, it's flawed logic. And it's easy to grow accustomed to saying, well, this game is random. It's not an even distribution of buying and selling winners in my trading. I have to always be willing to see the market go into states of randomness. And that is everything's in here. Down for tick. Proof of that. See it before it happens. And where it trades right to a specific level, down to the quarter point market. Sucks. And one has to admit, either the world collectively is listening to little old me, a nobody from Middle River, Maryland, and they're all marching to the beat and drum, the Pied Piper playing, and they're buying, they're selling, they're stopping exactly where I said that level should be sensitive. Or, and this is the truth of what it is, the market's too big. And they're set to that level by algorithmic price level. It doesn't matter. All of a sudden, nobody wants to buy above that tick high. No one wants to sell below the tick when it's been dropping, right where we say it's going to go to. Isn't that odd? Isn't it odd? Okay, look at your level 2 data, those that believe it. But there's still orders below above these levels. Why aren't they getting back? because they're not part of the party, folks. They're not being invited. They're just left outside. The 501 Club, the people that are in the mix right now, they're in there. They're moving and shaking. They're in there. They have been ushered in to the highest place right now. That's the volatility in the marketplace right now. They're in there. And you always have people that are outside waiting for somebody to take them loudly on fire code to let more people in for the party. They're trying to usher in. Please let me slip in. I'm at my foot. I can't let my in. Think about it like that. Why aren't these moves getting that 1/4 tick past it when there's 300 buyers? 300, 500, just beyond where we said it's going to go. And it says, can't come. See, you've never worked for something like that. You never investigated those things like that because the books never told you to think that. Just like when you go to school, they don't teach you how to be an entrepreneur. They don't teach you how to be your own business person and pay less taxes. Get paid to spend the money that you made through your business and then pay less in taxes and fines and it's even more than you in a salary job. You're going in ill-equipped, ill-informed, uneducated, and I'm raising my hand right now because that's exactly how I started too as a 20-year-old. In 1992, I absolutely had no idea what I was doing. Zero. And scared. And every time I went in and I was buying, I really didn't know what I was doing. I was very anxious. I could not afford to lose any money. And the times that I was wrong, I didn't understand how the market was going to come back and take the sell stops. I think that, okay, I'm going to take it. Yeah. That was the finding my way to understand the concept of a bears. Because I was a perpetual fool. Not because that's better than anything else. Not because Larry Williams said so. Not because anybody else I was reading the book from said it's the only way to make money to go along. Remember, I was trading commodities, grains, cattle, lean, buy hogs. Think about it. These markets are not just like straight up or straight down. They're all over the place. They have real supply and demand factors associated. Not like equities, not like index futures, not even like currencies. That's artificial. But the world's grocery store, commodities, they have a real value. They're always going to have value. They're never going to zero. Bitcoin can go to zero. Cattle prices will never go to zero. Everybody has a cheaper. Okay? Sometimes it's big. But narrative tells you as the trader, is it really the right time to be buying when my bias is bullish? And narrative is the definition of how that time frame that you're looking at is going to deliver to whatever target you arrive at in your analysis. Case in point would be this. Let's assume for a moment you're bullish on Nasdaq. Okay? And you look at the weekly chart and you feel like, okay, it's going to go higher. And I think it's going to go up 600 to 700 handles from where it is at present. I'm not saying that's the case for right now. I'm saying hypothetically. I know you're probably listening to it on somebody else's YouTube. And there's no reference to time. Okay? So don't listen to this thinking I'm applying it to great present market at the time you're looking at it in the charts. This is pattern. So you have several hundred things that is delivered to over the course of 1 or 2, 3, maybe 4 weeks of time. So you're going to submit yourself to 4 weeks of time for that target to be delivered to. There's a relative equal height up there. There's a fair value gap, something other than balance. There's your reason for going up there. I think that's not the most important thing. The important thing is, now that you arrive at that bullish bias, how will every single daily candle paint? How will price book on the daily chart? Where will the open be? How will it close there? How will it close between Monday and Friday? Where's the low? How much can it move for that and still be bullish, but not deliver it all in one shot? See, these are all questions you have to have. Kind of like a checklist. Now, I used to have a checklist. It used to be a long, like a pre-flight list of things I'd worry about. And I shared it before. And you're going to ask for it right now. And I'm sure somebody that has collected everything ICT has it and will probably share it. That's okay. Let them do it. It's fine. But it's as simple as this. Every session that is the London Open, that is the Asian session, all of it is Asian session at stack. Also at their time-based range, where there is what it's going to do in that certain time. And they're like puzzle pieces. Think about it like this. Anyone that does jigsaws, and I love jigsaw puzzles. I'm a problem solver. I've always invested in puzzles, and I've collected jigsaw puzzles since I was a young guy. And the more pieces there are, the more I love it. And anybody that's ever done anything with jigsaw puzzle knows that you gather all the smooth edges, those pieces first. Doesn't it sound similar? Doesn't it have echoes? Something I've already been teaching. Find that where it's smooth. Okay? And then when you get all those smooth pieces, what are you doing? You're making the border. The furthest extreme of whatever that image is that makes that jigsaw puzzle. You build that border first, and then start working your way in. That's the secret to a jigsaw puzzle. You find all the border pieces first and work your way in. Well, when I teach you read price action, what do I tell you to look for? Smooth. Look where it's smooth in price. Because that's where it's going to disrupt it. And here's the wonderful thing. That occurs every session. Every session. But you're looking at it just for the daily range on a 15-minute time frame. Or you're looking at it from low to high. Only one pool of liquidity. It's all that's going on right now. It's only going to reach to this one. And that's fine in the beginning. It's absolutely fine. That's the proper way of going through it. But if you stay there and you stagnate that for a second, looking for whatever closest price, and that's how you should start. That's a low-hanging fruit jacket. That's easy to get to. It's a quick, easy reward. It's an attaboy, attaboy, attaboy back. That. The instant gratification of seeing it deliver like that, that is important as a developing trader. But it's not all there is. It's not all there is. The reason why I teach the lower time frames is because it gives you greater detail. It gets you down to the microscopic level, like someone that is an engineer. And they study structures, real structures, steel bridges and whatnot. And they don't just walk around and look for bends and cracks. They're looking really detailed because they see stress fractures that are forming that you just won't see. It'll make it up. So what are they doing? They're studying that bridge. They're looking at the lower time frames, the microscopic level. They're looking for stress fracture. Well, in price action, we're going sub 1 minute. Already, I'm going to okay. Lots of teaching material, lots of study material. See it every day, not just one time, and wait weeks and weeks and weeks for a daily chart. Don't be stubborn as a student. If you're stubborn as a student, you won't learn. You have to be always ready at the moment to learn something. What I'm telling you is fractal. That means everything that I'm applying to, like say, a 15-second chart. All those things happen on a 4-hour chart. They happen on a daily chart. They happen on a monthly chart. They happen on a yearly chart. Okay? So don't get yourself all that out of shape thinking, oh, this doesn't apply to me. So let me just excuse myself. Don't do that. If you look at a sub 1 minute chart for the session, it's a session. It's an hour and a half's time. And that was not a 1 minute cycle. It's just a block of 90 minutes. If you look at sub 1 minute, you're going to see lots and lots of relative equal highs and relative equal lows. And you'll see how the market gyrates and clears those and then moves in the direction you thought it was going to go, assuming your bias is correct. So narrative affords you the understanding of how on these smaller time frames, 1 minute, 5 minutes, sub 1 minute, how they're going to go intraday and seek the liquidity. Do not need levels data. You don't need it. You don't need volume profile. You don't need all that other stuff. Yes, and all that stuff. It's so different than a Bollinger Band or EMA, exponential moving average. They're just gimmicks. But you know what? Without teaching past a gimmick to it, it's liquidity. And I'm teaching you how to not even spend that much time worrying about if you're right or wrong about where it exists. Because they're always going to be below a single low, and even more so below closely correlated lows. That means they're very, very close in proximity to around the same price. And the one that's most recently formed, if it's a low, it's going to be slightly higher than the one previous to it. That validates it. That's a prime candidate for a liquidity run. Rate it and rip it and go the other direction. That's narrative. How does ICT buy it there? Why didn't he use that right there? Why didn't he buy it there? Why didn't he look at this as the market structure here? That's what I'm answering. Now, a new student, it's like a big something right over your head. But I promise you, bookmark this if they're going to put it on their YouTube channel. And I gave them permission. This is my people. I could talk this talk on my YouTube channel, but that didn't doing it. Because I don't need the money. And it proved that I'm trying to teach. So it's helping. And a teacher means edified by doing it. I know this is preaching. I know it's helping. But don't be frustrated if you're relatively new and it's feel that it's going on your head. The people that do put it on their own YouTube channel, could you please just make sure you post the link? Don't do it 50 times in the comment section under this. It's just one time is necessary. Don't spam it. So that way folks can watch it on your YouTube channel and they can pull up subtitles and do all that stuff and not worry me about it. But come back to this lesson when you get a little bit more experience. About 2 months experience. If you're brand new, about 2 months of watching my material and 1.2 before it happens. Then this lesson will mean much more to you then. But as a brand new upstart, it seems alien. It feels disconnected. But for the folks that have been around for a while and been around the block with me, you understand there are fair value assets I won't touch. There are owner blocks I'm not trading. I'm finding the ones that make sense right now because I'm trading with proper narrative. I know I'm bullish. I've made it very cogent to you. It's going higher on the daily chart. Here's where it's going to go to. Isn't it wonderful it did it again this past week? I was a little nervous to be this week. I was afraid it was going to work this past week. Oh, micro pigs. It's kind of full of themselves. But knowing the high and the low of the session, each session, as we close the morning session, call it 11 o'clock in the morning Eastern. So 9:30 opening bell, equities. Go through that range. As soon as 11 o'clock hits, go down to a 1-minute chart, screenshot it, and then go into a 15-second chart. Now, I understand some of you don't have a 15-second chart. This coming week, I will post them for you. Okay, I will post them in the Telegram channel. So I will give you the same canvas that I'm going to use. Your homework this week is to use the charts I'm laying down for you in the Telegram channel. You can find that Telegram channel on my YouTube, or the channel description, and right underneath, if I'm mistaken, I apologize, but it should be right below or above the link that takes you to my X account, aka Twitter. That way you know you're using the proper Telegram channel. If you're watching something in a Telegram channel, they're offering you investments. Definitely. That's partnership. I'm not I'm not asking you to set any money. Pay me, right? So if anybody does that and it has my name attached to my image, it's a fraud, it's a scam, don't believe it, it's illegal. But the charts I post, I want you to do what I'm going to tell you now. And then I want you to do this every day as a trader. Because this is what I do. Close at 11 o'clock Eastern time. I don't care if it continues going higher. I don't care. That's not what we're talking about. But you have to encapsulate that jigsaw puzzle. You got to get the border pieces first. 9:30 to 11 o'clock. You can make all the money that you would ever dream of in that 90-minute period of time. I promise you, you don't think so. You think you got to swing trade. You see these guys? Yeah, man, nobody can trade intraday scalps. You know how nobody scalps and makes money, bro? Why are they ignoring all my students? Why are they all ignoring your profits that you're showing? Why are they ignoring that? Isn't it odd? It's odd that everybody else outside of our group turns their cheek like, oh, it applies to everybody else. So let's not talk about them because they're just a cult. And we are a cult. We do things different. And by taking that 90-minute period of time from 9:30 to 11, sweet shot. When you're bullish, while we're bullish. Now, in the beginning, you're only going to have the bias that I know share. And there's nothing wrong with that. That's what I'm doing. I'm lending my experience. That's why I do it. Because you don't know what you're doing. And you're going to have a whole lot of time worrying and obsessing, conversing with yourself internally with a dialogue that is self-defeating. You're going to worry about things that don't have any bearing on what price is going to do. And you're going to be worrying about the thoughts versus watching price action and gaining the experience of saying, okay, I'm neutral. I want to watch to see what it does. That's the missing piece that every failed ICT student, every trader ignores. You have to discern how you internalize what's going on. As soon as it runs 10 handles, you're thinking it's going 100. I'm missing out. FOMO. Fear of missing out on the move because you saw something sporadic. I don't feel that. I'm not looking at price and saying, wow, where did that come from? Oh my goodness. I'm not thinking like that. I know my own.